Gold is looking at the fourth consecutive month of gains, and a massive new player has emerged in the gold space, buying more gold than any central bank in the third quarter. Who that is, we'll discuss later here in this weekly market wrap-up. But if you've been following along on our channel, you probably know who that is already. And with that said, welcome to our Soar Financially weekly market wrap-up. Really appreciate you joining us. I'm back in the studio. It was a busy fall. I'm really looking forward to winding down the year and really counting the days to Christmas. But until then, we got lots to discuss. And maybe before we get started, dive into some of the details and some of the things that kept us busy this week. I want to say thank you to all of you who joined us in Frankfurt at the Deutsche Goldmesse. It meant a lot to meet many of our subscribers at the conference, and it was probably the best one we've ever hosted. We had phenomenal keynotes. We had a massive turnout. Of course, over $4,000 gold helps. Momentum was there. Enthusiasm. People were excited. It was absolutely phenomenal, and my head is still spinning. But in other news, our videos are now live. Just go over to YouTube, type in Deutsche Goldmesse or at Deutsche Goldmesse, and you can find the presentations from day one are up already. Day two will follow later today here on Friday, November 28th. So make sure to use that. We've got some phenomenal panel discussions. We got Alex Greiners giving his hedging presentation and many more to watch here. So go ahead and do that. Yeah, as I said, I'm really appreciative of you all joining us in Frankfurt. So thanks so much for doing that. Now let's dive into what really moved markets this week. Let's take a look at the calendar first, because there are a couple things I do want to highlight that we've been presented with this week. So we got the PPI. I think that's the producer price index, as expected, within consensus. But one thing that wasn't within consensus, and that's retail sales. That's something I quickly want to talk about because the consumer sentiment has been lacking in the U.S. and it's been coming down. Let's take a look at it in more detail here real quick. As you can see, there is a negative trend. It's not in negative territory or negative growth at all yet, but the trend is negative. And those are the September numbers. Keep that in mind, not October. For the consumer sales, and my assumption is that October was weaker before Christmas period kicks off again. This is especially interesting since forecast institutes are looking at let's share this here real quick, record Christmas sales over $1 trillion for the first time. This is absolutely crazy. Although, as I have to admit, I've been doing a lot of Black Week shopping. There's some insane deals to be had, but it's now Black Week. It used to be Black Friday, now it's Black Week, and some companies have extended the Black Week to Black Month and all of that. So desperation is high here on the sales side. But I was looking at this. Okay, so we're getting $1 trillion. We're exceeding it. They're anticipating growth between 3.7 and 4.2% over 2024. And I'm wondering, aren't we supposed to be in a recession? Isn't the consumer supposed to be hurting? So I took a closer look at that, and I'm struggling with understanding it. But I was looking at this. So how does the consumer finance this? And then I looked at this here. United States credit card accounts. Highest level in Q3 that I've ever seen. Let's take a look at the 10-year real quick. Well, it's going higher. I don't think it's just consumers signing up for insane credit card programs where you get a ton of miles and sign-up bonuses. I think they're actually using those credit cards to pay for those expenses. And maybe the other one we should look at as well is debt balance, of course, in credit cards is much higher. And if you look at it, of course, constant trend. We've seen a bit of a credit card debt being paid down, of course, during COVID as the free money rolled in. But overall, credit card debt is at its highest level in the last 10 years. Is that sustainable? Not in the long term. Not in the long term. So I really want you to keep that in mind. Looking at consumer sentiment when you hear is like, okay, everything's great. It might not be. It might not be. So keep that in mind. Before we talk about other market moves here, especially out of the U.S., I do want to talk geopolitics for just 1 second, because of course the macro influences the micro. The macro for us is what's happening in the markets, of course, but also geopolitically. Let's take a look. There are two big topics that sort of dominated headlines this week or over the last 7 days. One, of course, is the peace plan that was suggested between Russia and Ukraine here, with the U.S. brokering, of course. It is interesting. It is getting some traction. Of course, a lot of the points were mentioned, or maybe even copied, as some source suggests, from a Russian peace plan. But Putin breaks his silence on Ukraine peace plan, says Moscow is ready for serious talks, which is good. We do want peace. The question is, at what cost? And are we going to, or is the Ukraine, not we, is the Ukraine going to accept certain considerations? Maybe some territory needs to be handed over to Russia, but the peace plan itself is interesting, but it could have been done 2-3 years ago if we really agree on all of this. Quite honestly, we could have cut the war short by 2.5 years or 3 years if we agree to many of the things that are now being proposed, like no NATO army or military being stationed in the Ukraine. Ukraine remains sovereign. U.S. guarantees for security. Russia says it's not going to invade any of the other European countries, which made me really laugh, quite honestly, because as a pragmatic, and we've discussed this here on this channel with Martin Armstrong and many others, Russia has nothing to gain from invading Europe. We don't have any resources. We don't have any money. Yeah, they might make it to Frankfurt and get our gold, but I'm trying to be funny here. But there is nothing to be gained. So that's why when I saw this headline this morning, and let me share this here, that Putin says he's ready to guarantee in writing no Russian attack in Europe. I have to admit, it's like, I'm not a Putin supporter. I'm not like all in his camp at all, but I do have to laugh about this. And he's probably laughing his ass off as well. Pardon my French here. But I'm sorry. Like, he was never going to attack Europe. And of course, he'll give it to us in writing because he was never planning on doing it anyway. So he must be laughing in the Kremlin. I'm sorry. This is an absolute joke that we celebrate this. But it was a given. So I'm all for peace plan. Neil Ferguson, let me see if I can pull up his tweet real quick. I didn't have it prepared. But Neil Ferguson even made some interesting comments, and he's a good commentator in that space. Let's see if I can find him real quick. He posted about this peace plan, and I do agree. The cost is high, and he offers a bit of a contrarian view to the latest negotiations. But how many concessions should Ukraine have to make? And let me share this tab real quick so you can see it as well. How many concessions should Ukraine have to make to secure an end to the hostilities? And we have to keep in mind, like, how is this going to end without any concessions? It can't become an infinite war. Ukraine cannot afford this. Europe does not really want to step in, or actually, Europe wants to step in. But what's the point? So he has some interesting takes on this, and maybe we should take a look at it as well. It comes down to costs and opportunities, I guess, opportunity costs. And while it's painful to give concessions, and I'm way out of my depth here, we need to find a resolution. I think that's the whole point I want to say. I think there is some movement. Why do we keep an eye on it? Because it could have an impact on the gold price, of course. Just coming from this, like any geopolitical, like peace is great for gold. Although like the peace in the Middle East hasn't really affected gold price. I don't think this will have a big effect either. Maybe $50, $100 at best. But it's mostly driven by other factors, and we'll get to those in a second. One other topic that I quickly want to highlight is or not highlight. It's not a highlight, but it's the escalation between China and Japan. Japan, as we all know, has a new prime minister, and she's rather aggressive. It's kind of interesting to see her step in the limelight and maybe taking it up a notch, because she's been saying pretty much that if China were to invade Taiwan, Japan would feel threatened, and it'd be a problem for their internal security. And I'm trying. There's one term that she used, and that is something that opened the door to something that could interact or could trigger a military reaction. Let me share this here again. I keep using Al Jazeera quite a bit, and I do apologize for that, but they have some really good articles, and I'm trying to find articles from various sources. And She says, if it involves the use of warships, military actions, it could by all means become a survival-threatening situation for Japan as well. And that opens the door to some aggression from Japan versus China and stepping in there. And aggression is the wrong term probably, but maybe some retaliation here. And now China has been escalating this to the UN. There's some trade embargoes happening as well. So it's a situation we need to monitor closely. Even Trump stepped in and mentions like, well, Japan, tone it down. We're here trying to have our trade war negotiated here and maybe settled. Let's calm things down here. So it is something we need to monitor. So far, I think it's all diplomacy, and it's not supposed to be too hot yet, but it's something we need to keep an eye on because China does feel threatened by the words from Japan, although I don't see Japan being proactive here, more retaliatory. But Japan keeps the option open of attacking Taiwan, so it is something we need to monitor. So that said, I already used the first 10 minutes just to talk geopolitics. Let's talk about what is really moving the gold price, in my opinion, and that is the Fed. I have to say, I can't shake that feeling. We've had some interesting commentary from Chris Waller and many other Fed governors this week advocating for a December rate cut. And since that was made public, gold has taken off. It's rallied another $100. Let's take a look at the gold price as we speak here real quick, so we're all on the same page. And gold is trading at 41.73 as we speak. It has accelerated. Let's take a look at the 1 month here real quick. So just as of last Friday when those comments were made, gold is up from 40.36, just barely above 4,000, now closer to 4,200 again, really accelerating in momentum. What was said? Well, let me show you something real quick. And I had that prepared right here. Let's share this and let's hit play.
But the labor market is still weak and we're getting no evidence telling me it's rebounding, and despite what the jobs report for September said. So my concern is mainly the labor market in terms of our dual mandate. So I'm advocating for a rate cut at the next meeting.
And this is Fed Governor Chris Waller. He's one of the three candidates that President Trump wants to potentially put or nominate for chair of the Fed. So that's really interesting because he was fairly neutral at the last meeting. And Stephen Marin, as we all remember, was the aggressive one. And he sort of backpedaled a little bit. And now he's out there saying again, well, we need another cut. And that's really kicked things off as his voice carries quite a bit of weight. So let's take a look at the September jobs report real quick that he's mentioned. And I have a couple questions about it in general, like about the unemployment. Why are we so concerned about the unemployment number? Yes, the trend is terrible, 4.4% unemployment rate, and this is for September. Keep in mind, because of the U.S. government shutdown, this report was sent to us or delivered to us 6 weeks late. So, of course, this is not accurate data. Keep that in mind. The non-farm payroll employment edged up in September. Okay, that was a bit against what we had expected, but the unemployment rate went up to 4.4%. It said it changed little. Well, it ticked up 0.1%. Yes, overall, that is little. Employment continued to trend up in healthcare, food service, and drinking places. That's kind of an interesting definition. And social assistance, great. Job losses occurred in transportation and warehousing and in federal government. No surprise there, really. Let's take a look though, and one thing I do want to show that I need to understand a little bit. I'm really trying to understand. Like, yes, the underlying trend, of course, is negative on the jobless rate. Let's take a look at this chart here real quick by Trading Economics. So this is the last year, 4.4%. Yes, it is the highest in the last 12 months, but if you look at the last 3 years, we're barely higher than where we were last September. Look at it, like 4.1. Now we're at 4.4. It's a 0.3% higher. So where's that urgency coming from of other Fed cuts? I'm starting to think, and it's starting to creep in, and please comment down below if you think very differently, but it's starting to feel like an excuse to lower rates. 4.3, 4.4%. Really? Really? Let's zoom out. 10 years ago. Okay, where were we in 2016? 4.8, 4.9%, 5.1%. I think we're still within the typical range. I would be concerned if it were 7%, of course. Maybe it's, I don't know, maybe they're seeing something that I'm not seeing, but it's not going to be 7% tomorrow. Maybe if the stock market collapses, maybe. But come on, let's be real. Let's be realistic here, right? So it's trending higher. We had let's take a look at the Fed watch as well. What's the rate cut on right now? 84.7%, as you can see, for a December rate cut, and it is forecasted that we'll see 3 more rate cuts in 2026. So market, of course, is euphoric, as we all know. Let's take a look at the S&P 500, doing quite well. Let's see year to date. It's trending. It's trading near all-time highs yet again. The all-time high was 69.02, so we're still $70 below, or 70 points below all-time highs here in the S&P 500. But we're getting there again. If we're getting close, right? So, all right, let's talk gold, because as I said, the Fed is influencing gold prices, and let's take a look at gold again here, just real quick. So last Friday, all right, this is when it would jump from 30% rate cut chance in December to now 85%. This is now being priced in. Is this the end of it? It really depends on the comments, of course, but we got another, 12 days until the Fed meeting, so this could trend a little higher. I think we're out of that consolidation phase, and we'll see if we can get above 41.97 again here in the coming days to see if we make it back up to 4,400. Again, I'm not a chart technician. There are way better experts out there to explain chart pattern, Fibonacci extensions, and Elliott wave, and all that good stuff. Whatever you subscribe to, right? Absolutely. But one thing I do want to talk about, and I mentioned in my intro, there's a new player in the market, and that new player is making waves. It is a stablecoin operator. It is Tether, and they have been buying gold like there is no tomorrow. They are the largest, or they have been the largest gold buyer in Q3, bought more gold than any central bank, 24 tons in Q3 alone. That's more than Kazakhstan, Brazil, Turkey, that's than the central banks here. But what's the goal? What are they doing? Like, how much gold does Tether actually own? So they own 116 tons of gold. That's more than $14 billion. Let's take a quick look at the reserves here. This is from their October report from Tether, and the company holds gold and Bitcoin reserves at $12.9 billion and $9.9 billion. Bitcoin is trending down. Gold is trending higher. It's being increased. And let's take a look at this report that's been put out as well. You can see, of course, the stable coins that Tether's been issuing are mostly backed by U.S. Treasury bills, $112 billion. Some money market funds, some cash as well, of course. But the interesting part is the stable coins that are being backed by the U.S. Treasury bills. Tether is banking the interest that's being paid on those bills. And that's what they're using. And that money they're using to buy precious metals. They're buying Bitcoins, but mostly precious metals. And if you recall, if you watched this episode before, or watched a weekly wrap-up before, they have been buying into royalty companies. Why? Because they might actually be paying a dividend at some point. And I've interviewed Adrian Day yesterday. The interview with him will drop on Sunday. Go check that out, because we talked quite a bit about Tether's plans in the royalty space, in the gold royalty space in particular. And it's eye-opening. Could be quite interesting, a lucrative opportunity for us investors in that space as well. And we do own a couple positions within the fund, the Kamavest or the Kamaxus Resource Fund, that could be benefiting from this as well. Maybe we own some Elemental royalty now, which is now listed in the U.S. We also own some gold royalty, which recently saw investment from Tether as well. So there's some opportunity for us. Coming back, ETF flows are actually Tether's. I see them increasing, by the way, their position further as they're reaping in more and more interest payments from their U.S. Treasury bill holdings, and they're using that money. They're also buying farmland, by the way. They're not just buying gold, they're buying farmland, as I said, Bitcoin as well. But gold, of course, has been a big focus as of late. 116 tons, that is a tremendous amount of gold. And it's something we should be watching. So they could be making a big splash. And it is interesting how that, and I wouldn't call it the crypto world, maybe the new, the new, what do you call it? The new instrument world, coming back to the real assets, coming back to gold. So interesting, really interesting move. One other thing I want to talk to you about is, of course, ETF flows. And I love looking at the gold ETFs here. This is from the World Gold Council for October 2025. That was published earlier in November. And a couple of things I do want to highlight. And it's absolutely puzzling. But as you can see here in this chart, North America and Asia offset European outflows. Like, why is Europe selling gold? Germany had its biggest month of second biggest month of outflows in October. apparently it's systemic portfolio rebalancing and taking gains off the table. Here, driven by a combination of profit taking and systemic portfolio rebalancing. I thought we're at the brink of a monetary financial collapse. Like, why are we systematically rebalancing our portfolio away from gold? I don't get it. Like, what is happening in Europe? Germany had its second largest monthly outflow as the ETFs. Really? Why? What are we doing? So let's take a look. ETF holdings and flows by region. Well, Asia has been the biggest buyer, 13.4%. There's a really cool overview as well, because it shows the funds that have been buying, of course. By country is also really interesting. South Korea bought 39.7% more, but China here bought 33.8 more tons. So that's up 17.5%. But the fund flows, top 10 fund flows right here is really interesting, because where are they from? Well, the U.S. Okay, great. Maybe let's go by here. So the biggest 10 top 10 fund flows: China, 19%, 17%, 16%, 13%, and down here, Sprott Physical Gold Trust. Let's say Canada, 2.5%, or U.S. SPDR Gold Shares. Okay. The sad part here is biggest outflows: UK, sort of Europe. Italy, Germany, UK, Switzerland, Germany, UK. It's like, come on. Really? Are we really rebalancing? Curious what that means. Quite on. So, something to watch, something to monitor, but Asia is still buying aggressively gold, and we're seeing that more and more. Stimulus packages, like Japan is stimulating the economy. China is starting to stimulate the property market, so there's more money coming back. Something we definitely have to keep an eye on. So we talked gold. Let's. I don't have much prepared for silver, quite honestly. Go watch the interview with Gary Savage. He's predicting some interesting stuff for silver. Much higher prices, of course, but something. Or I've heard that a few times this week. Silver is apparently the trade. So go check out that interview with Gary Savage. It's absolutely worth your while. Let's see, what else? We talked about this. Let's talk about companies a little bit. Let's talk about, I've prepared 2 articles here that we need to share. Barrick is under pressure to restructure or split. Activist Elliott's taken a stake, of course. A CEO has left. We talked about this at length because he left the same day Tom Palmer left Newmont. So that was really coincidental. Gold was at $3,800 that day, and both CEOs of Barrick, Mark Bristow and Tom Palmer left, but they're still disorganized at Barrick. Like, there's now talks about restructuring or maybe splitting up the company, focusing more on Nevada, maybe even selling Reko Diq in Pakistan. Wonder who could be that buyer, because the risk profile, of course, is painful. There are constantly articles coming out about terror attacks in Balochistan there. Not sure why you'd want to be there. Besides, it is an economically lucrative project, but does it really fit the Barrick profile? And on the other end, like Mali, as we all know, Barrick had some massive issues in Mali with one of their gold mines. 4 of their staff members were imprisoned, and this seems to be getting resolved as well. Let's take a look at the share price of Barrick real quick, and it's looking fantastic. We had a bit of a dip because there was uncertainty. Following Bristow's exit, but now looking at the cash, Barrick has a net cash position. Free cash flow is at a record level, and maybe I forgot to mention it when we talked about the gold price, but Q4 gold prices, average gold prices, over $4,000 right now. That should print massive free cash flows for the miners. Last quarter, Newmont, for example, reported achieved price per ounce sold was $35.39 per ounce. We're trading over $4,000 gold right now. The margin expansion is increasing. Yes, costs are increasing a little bit. We talked about Agnico having to pay higher royalties, for example. But come on, the $500 more per ounce, staggering. And I think that's what we're seeing is being priced in now. The activity by Elliott is being seen positive as well by the market. A split up, maybe getting rid of Reko Diq or spinning it off into a separate entity might make sense. And the market is really celebrating that. So really, really good stuff. And one other article, we haven't talked about copper yet today. I don't have. Let's take a look at the copper price real quick. Let's take a look real quick. Copper is fighting its way back. We had the tariff news here, but I said it before. Copper is now in an uptrend, 518 per pound. So copper is still very much sought after. We don't have to go into the supply and demand story here, but one thing we do need to talk about is the Anglo Teck merger, which is still not finalized. And BHP was looking at maybe jumping in there as an interloper and talking to Anglo again, but they walked away. It is interesting because BHP, of course, the world's largest mining company, seemingly made a fresh attempt to buy the smaller rival, meaning Anglo, but then walked away just a couple days later. We don't really know what they saw or they didn't see, or whether Anglo was just being ridiculous in terms of what they were asking for, perhaps, but that's speculation on my part. But it looks like the only interloper that we could expect now to break up the Anglo-Teck merger could be Glencore. They will have to sign off because they do have a joint venture with Teck down in Peru, if I'm not mistaken, maybe Chile. But they could jump in and maybe buy out Teck straight up. That would make things a little more complicated. But to be honest, I'm not seeing it. I Googled for headlines or any rumors. There isn't much. So, or there isn't anything to be found. So it's something we need to keep an eye on because copper is highly in demand. Would BHP buy Reko Diq? I doubt it personally. I don't know enough about that, but the opportunities are getting very, very rare out there. So maybe the desperation calls for a desperate move. So it'll be interesting to see what's going to happen here. That's all I have prepared for this week. Already 26 minutes in, but really appreciate you watching. If you have any questions, let me know. It has been an interesting week. Of course, we're watching on a regular basis what is happening. I do have one last trip lined up. I'm headed to London for a conference and a ton of meetings with companies next week, Monday through Wednesday. But I promise we'll continue churning out phenomenal content with phenomenal guests. I know who's coming. Judy Shelton. Professor Zhang is coming back next week as well. Really looking forward to catching up with him again about what is happening in China. Perfect guest to talk about the relationship between China and Japan right now as well. So if you haven't done so, quick reminder, hit that like and subscribe button. It means a lot to us, and I hope you enjoyed this weekly wrap-up. If you did, leave a like. Thank you so much. We'll be back with more. Take care.